Welcome to Turning Hard Times into Good Times. I'm your host, Jay Taylor. We do have an awful lot of ground to cover, so let's get right to David Gurwitz, who's with me. Welcome, David.
Hey, thank you, Jay. I noticed, we're into patterns. You've got a lot of Davids today. David Gurwitz, David Stockton, David Jansen.
That's correct. And so we have to say David, we have to use the last names, I guess. Mr.
That's okay.
Well, anyway, what do you say to those who claim, and here's something I hear very often, David. I hear very often people that sort of poo-poo technical analysis because they say, how can you rely on technical analysis? The markets are so rigged. Starting with Federal Reserve policies of printing huge amounts of money, altering the markets as a result of that. How do you, whereas you and Charles Nenner really look at markets almost exclusively not from a fundamental point of view, but not just cycles, I might add, but a lot of different technical analyses. You pull them all together. What do you say to people that say, no use looking at technical analysis because the markets are rigged and you don't know what these guys are going to do next?
Well, that's a great question. If you go to the site, and thank God I've been on your show quite a bit, and people we get from your show are quite thinking and listening, so we appreciate it. Go to charlesnenner.com and sign up for a free month of watching the research, which covers stocks, bonds, commodities, and currencies, and economic indicators, all based on cycles, technicals, targets, etc. Charles called the Dow from 10.8 to 14.5, and it went to 14.2. And all the stuff that happened that Greenspan did back then, if you remember that name, didn't matter. So when people say technical doesn't work because there's intervention, there's always intervention. There's never not intervention. That's the whole Keynesian idea. A politician has to say, I have power to do something, I'm going to do something. We believe, and this is, I say Charles came up with it. I think the man's a genius, and I've had the good fortune to work with him for over a decade, and he did this at Goldman Sachs for many years. Patterns in the past repeat. When you combine quite a few sets of patterns, which we do, when they all line up, that's what's determining the news, not the other way around. So since we've made so many calls, and I'll go through all your categories, we know we have limited time, I'll go through the stocks, bonds, commodities, and currencies quickly, just to give you an idea. Since these calls have turned out right, not all of them, nobody's perfect, but look, you get the research, so I don't have to tell you.
I do, and it's remarkable. I tell my listeners that it is very good, and I have when I have time to be next to my computer and to trade, I use them and have used them effectively. But I'd like to ask you, first of all, starting with the equity markets. Now, Charles he has short-term cycles and then longer-term cycles, cycles within cycles. Right. So when he writes his daily missive, well, it's not daily, it's actually Monday, Wednesday, Friday, Sunday.
Correct.
We get stuff from Charles. When he writes those things, he's writing basically, for the most part, he's writing for short-term trading cycles, is he not?
Short and medium. Which is daily and weekly. Again, daily cycles is simply cycles based on daily data, weeklies based on weekly data, monthlies based on monthly. Let me talk about gold first.
Sure.
So you have some interest in that.
Well, yeah, I think more than anything else.
I know, that's why. So gold cycles, he called the level, I keep saying levels and cycles. Cycles only give direction. Levels are levels. He called the top at 1900 2 years ago. As one of my clients says, you give him a national award for this. Said it'd be a lot of bounces till it came all the way down, which is where we are. This quarter is the long-term bottom, which means July 1 to September 30th is the long-term bottom. Having said that, we've had two bounces. We went from 12 to 13, if you remember, not too long ago. And then we just went through another bounce where, as you saw, we went long Newmont and PAS, P-A-A-S, and it was each a 10 to 15% gain. So these are short-term moves within a longer-term perspective, meaning we think that we're near a top soon to gold. As a matter of fact, what we wrote on Monday is an example your listeners can get of what it says. Based on daily cycles, we're getting closer to a cycle top as long as there's no closes below 12.96 gold August contract and silver 20.40 September. There's no sell signal. We expect to see another test of the recent highs. So again, those are two correct trades within a longer-term perspective. So if someone's sitting long-term, they're crying because they're not going to have the energy to go back in again with other money to gold. It's hard for people. We're very much into the psychological effect of trading, meaning avoid feeling depressed.
Yeah.
To the extent you can, because we don't manage money, so we have a clear head about what to tell people. I don't want to.
Sure.
We just want to say, do this, don't do that. But avoid being in a bad state makes it easier to think. And so if you have clear head, okay, this was a good trade, gold and silver. Longer term, a lot of people stayed in after a 10-year run-up. So we're getting near a bottom. It's not quick enough for those people who are down, as you know, and you look at the whole industry has been down because less money's gone into the whole industry last few years, but I think they're going to have its day back in the sun. It's going to go back to its highs and then some. So that's good news for gold and silver.
So we're looking at basically we should have seen the bottom, the longer term bottom. This is a quarterly bottom we're talking about now, or a longer term than that even, Charles?
No, longer term. This quarter.
David,
this is the quarter for the bottoming, but it's a bottoming process. Could bottom September 30th.
Right. So we could be looking at a bottom from. In other words, this should be the bottom from that top.
Yeah,
the 2011 top.
September
We've hit
30th,
the bottom.
So we could have another move down that's substantial in the next month and a half or 2 months.
Right before the end of September.
Yeah, but this is, according to us, the long-term bottom.
Okay,
and
fair enough.
All
right.
The top, we might get it right with the bottom. So that's gold and silver. Crude and nat gas. We've we just said 2-3 weeks ago, crude went down even though there were wars. Okay, and then it just went on a buy signal last week.
Right.
So crude, we think, could go back up into the 122 area, which is interesting. 6 years ago, remember, the beginning of 2009, crude was in the 40s or something, after it had come down 100 points that he called. And everyone was hoping crude would go up because it would indicate economic activity was starting up again. Now, if it goes up, oh no, there's war. So again, it depends. The view of things changes over time. That's why cycles work, according to us. So
but again, you're not looking at wars and saying, I got to go out and buy gold. You're looking at the cycles.
We look at cycles and tell you when things are going to move. As a matter of fact, as you and I have discussed, there are war cycles. Charles called 3 years ago, and look where we have now. He said 3 years ago war cycles were bottoming. There are now
we're heading
11 major wars, either going or potential, talked about or not. People don't realize China internally is a bit of a mess. Everyone knows what's going on in the Mideast and the Ukraine. They don't really know about Africa. I mean, they see girls kidnapped, that's one thing, but there's a lot of stuff going on all over the place, and there's tension. According to the war cycles, it's going to increase over the next several years, unfortunately.
Yeah, unfortunately. All right, well, we just have a couple of minutes left.
Sure.
Talk to us about the equity markets and the VIX.
I'm going to talk about stocks and the VIX together. VIX, of course, volatility index. Again, I want to remind your people, listeners, write into the site, Charles Nenner Research, say to listen to David and Jay speak, the David G, as opposed to the David S and the David Jensen, and we'll give them a free month of watching this. So stocks are in a topping process. And while we think there'll be a down move and a come back up again, we are at a very long-term top around now in the next quarter or so, and next 5 years are down, not straight down, but there'll be down moves, a little up, down moves up, and everyone will think it'll be over. And we think towards the end of the decade it's going to really be cut in half. And then the 20s look really strong. So that's a very long-term view.
Very long-term. So we're heading into what might be called a secular bear market in stocks.
I guess you could call it that. I don't know what those terms mean, as you know.
Cyclical or anyway, long-term bear.
Cycles. Then the VIX is short-term bottomed and up for the next few weeks, so we think there'll be some type of a down move here, but not longer term yet. So that's the stock. Now, having said that, corn stocks and food stocks we think are going to go up. So that's why we said by long-term calls on corn this week. So we think, ADD is a very good thing. I kid around sometimes. That's how we see that. You look at, someone says, here's $100,000, here's $1 million. What do you do? Corn. Bonds should be good to go till August. Yeah. Bond prices, not, because bonds have been in a bull market for 30 years. We think they're going to be in a bear market for 30 years. So both, basically what we're saying, stocks and bonds are going to be in a bear market, which is something we haven't seen in a while. It's not going to be so pleasant.
Well, a bear market for sure. I mean, we have had a 30-year bull market in bonds that has just been unbelievable.
Right.
And
Right.
A lot of fortunes have been made in the bond market.
Well,
so
and
you have
lost
to wonder,
because no one thought this would continue. We were begging people to buy the 10-year at 4%.
Yeah,
not too long ago.
Well, it is fascinating work, and I really do enjoy receiving my 4 times a week fix from Charles Nenner.
Of everything.
I'm sorry, Dave?
Sunday we send charts of things that are interesting to Charles.
Right.
And I'll give you an example of what we did last Sunday. I'll quickly zip through it. I know you got a lot to cover. I'll just read.
We're going to have to go, but give us real quick.
Australia,
next 30 seconds
Rio Tinto, BHP Billiton last week, Australian Bank, the Euro Aussie, Gold Corp, Silver Wheaton, Chevron, Canadian National, Anadarko. We did last week, we did Schlumberger, Tetra Nitrogen, technology sector, IBM. I'm not going to say what we said. People go right in and get it. Consumer discretionary, coffee, which we've called really great. Sell signal continued. We've seen 160, tradable low by October. So buy coffee in October, not just Starbucks.
Well, it's interesting research. It really is, and of course, not just the gold markets, lots of other places, and cycles. They're powerful influences in markets that none of us can really figure out. Of course, that doesn't stop the Federal Reserve from trying to figure out what interest rates should be and how much money we should have in the economy. Right. David, I want to thank you very much for joining me again, and we'll look forward to do it again. We have to have you on more often because I think
I'm available for you, Jay. You're always a pleasure and very bright.
Well, Charles' work is always I found to be very profitable and also very interesting. So thank you very much, David, for being with us. Look forward to talking to you again in the near future.
Thank you, Jay, and best to your wife and your whole crew.